Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Obviously, front and center here, the events over the weekend. Very well telegraphed heading into the weekend. A slight flight to quality trade. Great defense effort, coordinated effort. Certainly a win there, I think, for Israel. No one really knows what is lying next, but this morning, certainly we open up. Markets are in good shape. We're seeing deals hit the tape, which is constructive. And we get a great retail sales number economically here in the U.S., still doing very, very well. So let's talk about a couple of buckets here this morning. One is financial conditions, right? We follow financial conditions very closely. Chicago Fed President Goolsbee last week with Fox Business talking about financial conditions, how they play into Fed policy. Now, if you look at financial conditions, if you look at the Bloomberg Financial Conditions Index from October of 2023 to where we are now, very, very loose relative to where we were back then. So call it negative 0.15 to plus 120 in that index, indicating that financial conditions are on the looser side. Now, we are chopping around, but the reality is markets right now and the economy largely telling the Fed to do basically nothing. Markets repricing, Chicago Fed President Goolsbee, Dallas Fed President Logan, intimating recently as well, questioning the notion as to whether or not the Fed is restrictive enough. So this notion of neutral, where the neutral rate lies, the anecdotal evidence, both economically and we believe with financial markets in general right now, telling us that the neutral rate is behaving much higher than what the Fed has it at in terms of their official numbers in their summary of economic projections. Directionality, thank you to MarketWatch, Bloomberg, and CNBC. As of late, we have been calling for higher rates. There are questions within this pocket of time in terms of safe haven behavior. And in general, if you look at, say, the short end of the yield curve, if you look at two-year yields in and around 5% as we price out rate cuts in 2024 and we steepen out that forward curve, certainly the risk reward in terms of a safe haven trade is much better now than it was perhaps a couple of months ago when two-year yields were approaching 4%. Having said that, the market still trades in a bear mode. If you look at the long end of the curve, we were calling for yields to breach 450, move into that 450 to 5% range. And indeed, this morning, as we see an alleviation with some of the geopolitical risks over the weekend, markets are on the move once again higher off the back of stronger economic data. On the ground this week, we get a plethora of Fed speak. Just about every Fed official will be speaking this week. This morning, we heard from New York Fed President Williams intimating that he still believes that the Fed will have room to lower rates this year. And it's important, right? The second that the Fed moves away from the notion that they have room to lower rates this year, the notion that we potentially continue to price out the remaining rate cuts, which is somewhere between 1 and 2 rate cuts, then the potential to pontificate the fact that the Fed may actually need to go higher. So that narrative, we believe, is very important. Chair Powell will be part of a discussion tomorrow with one of the officials from the Canadian Central Bank. It'll be a Q&A. We do expect him to stick to that same script, saying the Fed is in no rush here, but they still do anticipate to begin lowering rates sometime in the course of 2024. In addition to that, today, very strong retail sales number. For the rest of the week, it's all about housing. If you go back to last week's interview with Chicago Fed President Goolsbee, he points specifically to the housing market with regard to the Fed's ability to get down to that 2% target. If the housing market doesn't temper here and in fact starts to move in the opposite direction, it will certainly complicate the Fed's job for the remainder of 2024. Wishing everyone a great week ahead. I'm Greg Faranello. I'm head of U.S. rates for Amerivet Securities.